Mayuresh also joining us in the show, so let me toss it across to him. Mayuresh, whether it's the fact that LG is going to come to India with its IPO, whether there is that buyers out when it comes to the Hisense as well, with respect to what's happening to EPAC Durable and all of that, conversation there, or the fact that there is private placement of higher possible in terms of the people seeking to buy a stake in that one. There's a lot of action when it comes to consumer durables and the entire ecosystem. Do you expect this is something which is a theme which is expected to play out even more in 2025?
Absolutely, Anisha. I think that is a high possibility because what you probably expected to see in terms of government capex actually ramping up in 25. I think the budget will probably lay testimony to that number. For the 11 lakh crore budget that has been placed last financial year, it should be significantly higher over the next few years, which basically means the impetus that the government is trying to probably get through in terms of its public capex. And more so ever in terms of investments done in infrastructure, in manufacturing, the various PLI schemes that have probably got announced. And a large part of that construct actually enabling a lot of manufacturers to probably look inward and diversify their supply chains, makes this space very, very interesting. Now, within this space itself, I think a few spaces that might do well. I think we've already spoken about power as a theme, right? But within power, the flue gas desulfurization players, the equipment that they probably make, there is a deadline by March 26 that you will have to probably suffice with in terms of ensuring that the old equipment is taken care of. And therefore, I think the expectation in terms of the market size of a lakh crore, which is their orders given to the tune of 10 to 15 or 1,000 crores, there is huge opportunity within this specific space of capital good manufacturers. So a couple of players within the listed space which can probably do well in terms of flue gas desulfurization as a space. The second element in terms of the core consumer durable space, the expectation in terms of significant growth catching up. And yes, we've been hearing about urban consumption probably slowing down. But for certain niche price tags and price elements and certain key pockets within the space itself, the expectation is that there should be significant amount of growth on a durable and a structural basis over the next few years. So this space probably looks a tad bit more interesting. And the third is some diversified players where the dependency on imports probably might go down, where there is a huge opportunity in terms of China plus one that can probably get played out. And with capacities that are getting played through, supply chains which are getting probably diversified, I think a few spaces within the larger manufacturing piece might actually do well. So very, very interesting piece, Anisha. I think a few themes like these might actually do well over 25, 26, 27. So I think the next 2 to 3 years might be a little bit interesting within the sub-segments of this entire capital goods growth, consumer probability.
Okay, thanks for that view coming in. Mayuresh, just coming back to you, I want to get your view on this interesting anomaly that we see every January called the January effect kicking in when it comes to stock prices. Also back home, January is going to be a very busy month because you have earnings that will be kicking in for the third quarter. Abroad, you will have Donald Trump who will also be taking the reins back once again on that on the administration front for the government. Tell us, amid all of these fluctuations, what are you expecting the month of January to look like for our benchmark?
No, so you're absolutely right. There are too many moving parts, which means Jan will be equally volatile as we speak. And the base case scenario is obviously going to be earnings. So come Jan 8th or 10th, you will have the Q3 numbers starting to flow in. And obviously, I think not much is expected looking at how Q2 has probably played out. So I think earnings expected to remain soft. And therefore, I think the market's reaction is going to be very, very interesting as far as earnings is concerned. Again, I think the entire Trump rhetoric that is probably happening at this juncture, the kind of sell-off that we're probably seeing in terms of FI stroke FPI outflows across the emerging market space. One must really understand that to probably ensure that manufacturing comes back to the US on a very strong footing, though the statements might come through, I think to put that in action might take time because it's very difficult to replicate a lot of manufacturing processes and have that arbitrage of labor and power along with that. So I think the rhetoric might have played out in terms of sentiments when Trump resumes office. But the rhetoric on ground in terms of a tectonic shift that is probably expected to happen might not happen on a fast track mode. Having said that, I think outside the US, our opinion still remains very, very strong that India still remains one of the best placed markets, both in terms of economic stability, political stability, and the path in terms of our fiscal glide path that we probably got. So I think one of the better managed economies or the best managed economies, if I would say, outside the US, will mean that at some point of time, FIs will have to come back. So yeah, Jan might be volatile to answer your question. You have too many things to look up to. Earnings might slow down, but I think there is every possibility that as we head into the first half of the next financial year, certain pockets, earnings degrowth, which has probably happened, might start bottoming out. And there might be a strong base case scenario for India probably to get re-rated outside the US.
Point taken. Yes, January might be a bit volatile. Talking about earnings, perhaps IT is going to see another weak quarter just because of furloughs, and from there might be a bit of recovery. And of course, the other thing to watch out for is just ahead of budget, that infrastructure in the entire public sector space starts to rally, whether that happens this year or not. In fact, taking that question to you, Naresh, what's the top recommendation or the best way to play these two themes, IT as well as public sector entities?
So in terms of IT, the name would be to accumulate something like Wipro, which is still lower than the 2021 highs. The stock was at 360 back in 2021, now at 300. So that is where there's a lot of catch up left. Infosys could be interesting on a gap down going forward on results in that case. In terms of the other side, I would wait out in the other segment.
Okay, Naresh, thanks for the view coming in. While we are talking about stock recommendations, Kunal, coming to you, what's your BTST trade for tomorrow?
So I'll go with two buy calls. The first one is one ICICI Pru. That's a chart which I believe is likely to form a near-term bottom for itself. We've seen the second straight day of a price recovery for ICICI Pru, and that's a stock which I would believe should be good for at least 690 over the very near term. Stop loss could be kept at 640. And from the mid-cap arena, it's Oberoi Realty, which is looking very attractive. The stock confirming a consolidation breakout back again about the 2,300 level. So would look out for targets in the range of 2,400, stop us at 2240.
Okay, so those are Kunal's BTST trades. Absolutely not surprised to see Oberoi Realty make it to your list. Kunal, I believe ITC and Oberoi Realty are your two current favorites right now. But on that note, Naresh, you also weigh in and tell us what are your BTST trades for tomorrow.
So one is a bounce back trade on PFC. The stock has corrected quite a bit in the near term. Stop loss at 457, target price of 470. Second is a buy on Sun Pharma, which has been flat for the last many sessions, but a lot of relative strength. Looks like a breakout move in the making. Stop loss at 1820, target price of 1860.
Okay, so the only takeaway for me from the BTSC trades is that tomorrow is still a working day, not a weekend yet, though mentally I think all of us have checked out, but it's another working day. Thank God it's Friday, so the end of the week, but definitely a working day. But Naresh, wanted your sense, or rather, let me take it across to, get more details as far as ITC is concerned, because that stock is under pressure, or rather has been doing quite well off late. And the reason, of course, is that, come the start of next week, there is that entire demerger process which is going to kick in. I believe the record date for that is 6th Jan. It's going to be effective as of 1st Jan, and the last date when you can perhaps buy the stock so that it is there in your account is 3rd January. So just ahead of that, there is a bit of an activity on that one, though right now it's coming off a bit. Mayuresh, what's your take on ITC? Could 2025 belong to some of these so-called dull FMCG names?
Can be a possibility, Anisha, but my view is a little bit divergent out here. I think two things. One, come Jan, you always start hearing about what if the sin tax probably starts going higher. So that always weighs on ITC and the cigarette business in particular. Though we probably see an inelasticity of demand in spite of hikes that have happened in the past, the street is always fearful of any potential increase in the sin tax that can come through, which can probably have some element of impact in terms of the core cigarette business and the cash flows thereof. The second element that it probably got, the other parts of businesses of ITC are doing well. Obviously, you've got the demerger as far as the hotels business is concerned, the agri trading business is doing well. But they've always maintained this stance in terms of the new businesses that they want to probably enter. A large part of cash is probably going to get deployed there. So I think the free cash flows that are probably going to come through, specifically from the cigarette business and partly from the other FMCG business as well, which probably might not get reinvested into the business, will get diverted in terms of the new businesses that they probably want to ramp up over the next few quarters. And therefore, I think over the past few years, as we saw the transition happening from cigarette to FMCG to hotels, I think that similar transition might happen in terms of earnings, purely based in terms of cash flows being deployed. So my own sense is that the stock might probably get stuck in a consolidated range bound manner. Numbers might be reasonable, but I think because of the developments that are happening internally as far as the business construct is concerned, the price movement might probably get capped for ITC.
So that's the view coming in on ITC on the back of fundamentals. Mayuresh, also take us through through a tech check of what this stock is looking like on the charts. And apart from ITC, also talk to us about some pure play FMCG names, the likes of HUL or Tata Consumer or Godrej Consumer that, for instance, have seen some kind of slowdown getting built up on the charts. Tell us if 2025 could hold a reversal for all of these counters purely on the technical basis.
So first, starting with ITC, the stock has made a base around this 460 mark, three bottoms over the last few weeks, and trying to cross about 480. Could be a breakout move going forward over the next few weeks, and maybe possibly test that previous highs of 520.25 also. So positive on ITC. In terms of the FMCG basket as such, you look at Hindustan Unilever, etc., would wait out for another 5-10% decline, and that is where they'll all become interesting. So if you go back to say an HUL, the stock would at say 2200 odd levels would be back to pre-COVID prices. Same is the case with a lot of other names. So Tata Consumer, for example, broke out around this 800, 850 mark last 1.5 year back. So 800, 850 mark becomes a good entry point. Same is the case with Godrej Consumer, which saw a big breakout happen around this area, only around 1000. So out of the current stocks, Godrej Consumer looks interesting at current levels to accumulate slowly between 1000 to 1050.
Godrej Consumer is one of those better looking FMCG names for now, but it's been an interesting year because of the data stats that we've got right from the IPO to what India ordered in terms of Swiggy, and it was yet again biryani that was topping the charts. But it's interesting to chalk out how the India really used a quick commerce space and what they Instamarted in 2024. My colleague Sumita is joining us with that interesting analysis and data points. Sumita.
In fact, just 2 days back, we were talking about what Indians really ordered, and of course, biryani formed a huge part of that. But let me take you through some trends as far as Swiggy Instamart is concerned. So Delhi, Dehradun users, 2 users from Delhi and Dehradun, they seem to be the big spenders on Instamart. In fact, both of them spent over 20 lakhs each all year round. In fact, as far as the orders on Instamart are concerned, in fact, top 3 must-haves for Indians seem to be milk, curd, and guess what? Dosa batter. 1 in every 5th order either had a fruit or a vegetable involved, and it was a Hyderabad user who actually spent 35,000 on mangoes. 1 in every 140 orders had a sexual wellness product. So that's a snapshot, overall snapshot of what India ordered. But you'd be surprised to also know that Instamart turned out to be a pet's best friend as well, because a pet lover from Mumbai splurged over 15 lakhs on pet supplies. But let's also take a look at how India ordered in terms of timings and time slots. So 4 a.m. to 7 a.m. was the timing for breakfast essentials, ordering breakfast essentials. Then 10 p.m. to 4 a.m. was all about ordering ice creams, cold drinks and chips. And then 8 to 9 p.m. was for sanitary pads, and which is what also saw a lot of people ordering pain relief medicines and ointments as well. In fact, guess how much was the cheapest order of 2024? It was 3 rupee pencil sharpener. In fact, when we speak of quick commerce, it's festive season that really gives it a push. So 2024 was no different. It was an Ahmedabad user on Dhanteras who spent over 8 lakhs on gold coins. In fact, the fastest delivery during the festive season happened from Kochi in just about 89 seconds. And overall, Indians spent 45 lakhs on brooms on Diwali day. In fact, 8 lakh Rakis were delivered across the country. Now let's take a look at what each of these cities are ordering. First up is Bengaluru. Well, Bengaluru ordered 1.8 times more wine in shot glasses than other cities, and of course ordered over 2,72,000 toothbrushes. Well, as far as Mumbai is concerned, Mumbai spent a lot, over 8 lakh rupees in just tonic water. And Delhi, well, Delhi spent around 60 crores on noodles. So it's not just biryani, but I think all noodles is giving tough competition to biryani as well. And then, of course, Delhi ordered the maximum number of potato chips as well.
Thanks for that. Very interesting takes coming in and takeaways coming in from what India has been Instamarting over the year that went by. But Mayuresh, let's keep it going with everything that we've been hearing about Swiggy. Lots of news flows, recent launches, a premium membership coming in. They've now gone ahead and launched a quick food delivery. There's Bolt. Lots has been happening around the stock. JP Morgan has also gone ahead and given a target of 730 rupees per share, the highest ever that we've probably seen by a brokerage house. Do you believe this kind of exuberance for this a company could continue going ahead? Because every time Swiggy tries to launch something, you have Zomato that's always got a one-up on its peers. Zomato is always innovating and launching new things as well. Put both of them against each other and tell us, if you had to pick one from this pack, which one that would be?
I think the trends are evolving. If you probably look at numbers again, right? The average order size for Blinkit was close to 660 rupees. And there were almost 90 lakh customers who were transacted in the previous quarter. Similarly, for Swiggy, I think the order size is probably going up. And the order metrics in terms of number of customers going up every passing quarter. Now, the trend is obviously definitive in terms of how numbers will stack up. Which brings us to the next question in terms of how competition will play out. Obviously, you've been hearing of Amazon, you've been hearing of Reliance Retail. There is their unlisted player, Zepto, who's been burning cash. But again, I think making a strong presence felt. So the kind of business dynamics that probably get required in terms of dark stores, both companies expecting to have almost 1,000 dark stores as we head to the next couple of quarters. The expectations in terms of Swiggy's food delivery business breaking even over the next 3 to 4 quarters and Instamart a couple of quarters after that has given the boost to the stocks and narrowed the gap that it had with Zomato as well. But to a large extent, again, I think specifically in the case of Swiggy, because Zomato has actually proven itself in terms of turning around the entire Blinkit business, hyper-pure, close to breaking even as well. And therefore, I think as these dynamics improve and evolve even further, with cash on their books, both their books, in fact, Zomato as well as Swiggy, there is plenty of opportunities organically and inorganically for them to grow. However, for Swiggy to probably re-rate from the current levels will mean that the next 2 quarters, the losses actually start receding, both on the delivery business as well as the Instamart business. And if that probably starts happening, my own sense is that the momentum will come back into the stock. Till that point of time, in my opinion, both the stocks are priced to perfection, largely pricing in the benefits coming through, at least over the next 2 quarters. In Swiggy's case, if this starts coming through in the next 2 quarters, I think the momentum in Swiggy can be greater than what we've probably seen so far.
Momentum in Swiggy has already been better. If you look at the last 1 month performance, Swiggy has been up, almost in double digits, 20-25%, whereas Zomato is actually down in 1 month. So you know where the momentum lies. But the momentum has been very off when it comes to Asian Paints. In fact, that stock is sitting at almost a 4-year low. It's at, of course, 52-week lows right now. But even if you pull up a longer term chart, I think it's the lowest level that we have seen on that stock since 2021. I'll get a chart check going on that one. But before that, Mayuresh, help me complete the point. We have seen the so-called, fundamental impact come in on the stock, the time-wise correction and all of that. But do you think this can continue for a long time, or do you expect that, this is one blue chip that has come out of various headwinds and various competition earlier as well, and it's bound to do that yet again?
It is a strong possibility because I think leadership stocks like Asian Paints will evolve and come back very, very strongly. Obviously, I think the cyclical argument that probably stays for and stays put is because of competition that has probably come through. Specifically in the premium segments that Asian Paints operates out of, they have sought probably price cuts happening. And volumes have also not met market expectations. And therefore, I think a combination in terms of earnings not coming through, along with pricing not remaining in their favor, largely reflected in earnings as well, is probably getting played out in terms of stock price. My own sense is that this might continue, at least for a couple of quarters, because you probably expect it to see some element of consumption slowdown actually play out on numbers. Obviously, input costs for the industry as a whole have stabilized to a large extent. But outside crude derivatives, I think labor costs have started inching up. So I think in terms of repainting demand, that is inching up slowly and steadily as we speak. But competition is also probably coming up, both in terms of dealer network, distribution network, so on and so forth, as well as pricing. So my own sense is that the company will find out ways to probably come back. Earnings will at some point of time will revert. But I think the next couple of quarters might be a little bit patchy, and therefore I think the first half, the stock might still be an underperformer compared to the product.
On Asian Paints?
It's still looking very weak on the charts, but then, this is almost like the 15th or the 16th straight week where the stock has fallen very sharply. And, after some point of time, the stocks are bound to get back into a deep oversold territory. And I believe somewhere down the line, the stock is now nearing that deep oversold territory on the charts. Because of that consistent sell-off, the stock has seen the divergence from its 200 moving averages. So looking at the divergence, the 200 DMA is placed almost 350, 400 points higher than the current market price for the stock, and that's a divergence of almost 15 to 20%. And remember, Asian Paints has been a stock which historically over the last 5-10 years has been considered to be low to moderate beta, and such kind of steep divergences, they generally don't last for a longer period of time. What matters over here is now wait out for a point when the stock starts to get back into a recovery phase. So the first round of a breakout, which the stock would probably indicate, that could be a signal that a near-term as well as a major bottom could be in place. I would believe that maybe around 2350, 2340 could be a breakout point for Asian Paints. So I think if the stock shows that signal over the next few weeks or over the next 1 or 2 months of a potential breakout about this 2350 odd mark, that could be a very good level to start accumulating as well as going long for Asian Paints.
Yeah, so it's traditionally a low beta stock, but given the fact that, this divergence has really continued and you've seen a stark underperformance, when it does recover and that 2350 mark is hit, is it going to be a steep rally or is it going to be a very slow recovery and you'll get enough time to buy the stock?
No, you'll get enough time to buy the stock. So what happens is, Anisha, when stocks change their beta, that's where they eventually form a major bottom or a top. Now, for example, if the stock was on the upside and the beta changes, then we are looking at the stocks forming a major top and then from there going to a reversal process and then a trend starting off. I would expect very similar for Asian Paints going forward. So whenever that change happens, say assume over the next 1 month, if we start to see that change happening for Asian Paints, the stock breaking past about the resistances, that's where we believe that a trend would seep in. And long-term traders, investors who've been waiting for the stock in terms of risk reward to start buying. So I would believe that they would be absolutely okay buying the stock maybe 50-60 points costlier than the current market price, but they would want to buy or enter into the stock price when there is a lot of confirmation that I believe could probably trickle in once the stock breaks past about this 2350 barrier.
Okay, that's the view coming in on Asian Paints on the charts. Going ahead on that note, Kunal, Nuresh as well as Mayuresh, thanks so much for joining us.
If you like this video, then like, share and subscribe to ET Now.